Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. Final Monday of the month, unless they changed the calendar and didn't tell me. February 24th, 1 o'clock on the East Coast. Dan, Nathan, Guy Adami, market call. Hi, Dan.
You know, Guy, people say to us all the time, why do you guys talk so fast? You know, and
I don't even think I speak that quickly.
Well,
I can speak faster than that, actually.
I know, but you know what it is? It's like if you grow up on a trading desk, there's no this or that or this. And people also ask you, why do you eat your lunch so fast? Why don't you tell them, Guy, why you eat your lunch so fast?
Well, because first of all, I didn't have a lot of lunches, but if you were so fortunate to have a lunch on the desk, you got to eat it fast because shit happens. And you don't want to be sitting there eating your tuna melt while the world starts to melt down. Just as an FYI. By the way, if you're eating a tuna melt, you're living life incorrectly. Back to you.
Back to me. Guy, so we started this morning looking at a market that was green. It was up, 40, 50 basis points, the S&P 500. Quickly lost all that. Some of the kind of culprits from Friday were down on the day pretty quickly. I thought that was kind of interesting. We bounced a little bit. So we got lots to talk about here in the market. We do have a little housekeeping, though, Guy.
Oh, I like that we housekeep.
So Gene Munster from Deepwater Asset Management, he and I are going to talk this afternoon. It's going to drop tomorrow morning in the Risk Reversal pod feed that's in your favorite podcast store. And then you and I are speaking with Fundstrat's one and only Tom Lee. That's going to drop Friday morning. So we got a big week, and we open the week with Liz. I mean, can you come on.
Can't beat that with a stick, as they say. And, it's interesting you mentioned the market. And might as well throw up the S&P chart because, we sold off 60 handles earlier this morning, and we rallied back about 40. So, we already have 100 S&P point move today, and the day ain't over yet because it feels like there's some more to come. But when you see volatility like this, and a VIX, by the way, which I think at one point today, Dan, traded up to 20, if I'm not mistaken, and now is backed off as actually lower on the day. I mean, you have a pretty interesting day, I think, going on.
Well, you've been saying this for a while, and if you go back, maybe Amanda can pull up the VIX for a second, is like anytime we've had those spikes above 20 and then get going pretty quickly, to the mid-20s, it's been a good buying opportunity for stocks. They haven't really stuck there too many times, in those levels there. Maybe there's been a few days. I think you have to go back to, late last year, that December 18th, Fed meeting. And then obviously that gap that we saw lower in equities, whatever happened there on that first week in August, that was pretty unnatural, but it was a great buying opportunity. We also look at the MOVE index. That's the VIX basically on the Treasury bonds and the yield there. And, that thing is kind of stuck in the mud a little bit. So I don't know, man, like you tell me, do people look complacent? If you were going, let's pull up a Walmart chart for a second. We know we spent a lot of time on this last week. You and I both thought if you're long, maybe look to hedge. If you're bearish, maybe look at put spreads. We detailed those last Tuesday on the show. Maybe just kind of isolate this a bit more. So you're coming off of all-time highs. You have that gap lower, closes very near the lows, right, the next day after earnings. So yesterday we opened down. That would be Friday. We closed near the lows. Today, we followed through to the downside. Now, you can see where that spike is. We're basically at the highs. We're still down a little bit. I don't know about you, Guy. That spike bottom formation, is that something that you like to look at on a chart? Because to me, that was on big volume. You had today follow through for the third consecutive day, and then you come off those lows, and now it looks like you're ready to what, Guy?
We're ready to party, maybe. And, I know what you're saying. Big volume is always, to me, a pretty good indicator, and we'll see how we close today. But I'm glad you mentioned Walmart because it's not anything wrong with the quarter at all. I think the guidance maybe scared people a little bit. Some of the commentary, to me, inventories may have scared people as well. We actually addressed that prior to earnings, and we thought the stock could sell off. Here we are. Question is, where do you get back in? And, maybe today is the day, but if Amanda wants to sort of broaden that out a little bit, I mean, you'll see where it's still in a pretty significant uptrend, pretty long-term uptrend. That is basically still intact. I think if we were to get through those recent lows, and if you go sort of the fall of last year and broaden it out, I mean, then you start to get a little bit concerned, and then maybe the moving average comes into play. It probably comes in around 81 or so. But, I'm not ready to give the all clear sign here in Walmart. What is interesting, though, quickly, we have two S&P charts with two trend lines. And the first one's the short-term trend line off the low that we saw August of last year. And we're right on it now, effectively, with today's move. We'll see how the rest of the day plays out. But this is the more interesting one, I think, this one. So this is obviously longer term. This goes back to the fall of 2023. Very steep upcline, not unlike Walmart, by the way. And one has to wonder, are we going to take a visit at the 200-day moving average, which is still obviously intact? Effectively, the uptrend line probably comes in with time decay around 57 and a quarter or so. And that's going to be, I don't know, does that sort of line up with the recent lows that we've seen? I would say.
Yeah, so you look at this and you say to yourself, okay, so the S&P is down but 2% from those all-time highs just made a week ago. What are some of the headwinds that we have to growth? What are some of the headwinds to, EPS in general? Because that's really what this should trade off of, right? At the end of the day. So you have trade, you have tariffs, you have immigration, you have sticky inflation. We talked a little bit about Mike Wilson's note this morning, but that's kind of what he's suggesting could be the headwind to price performance in the first half of this year, right? So you say to yourself, what accelerates all of that in the back half of the year? And, if this AI trade is slowing down a little bit, and I don't know if this is true or not, TD Cowen came out with a report. This is what I'm going to be talking to Gene Munster about this afternoon, is that Microsoft was canceling some of the leases for the data centers. Now, they built out many of their own data centers. They had this infrastructure built for their cloud business, Microsoft Azure, but they were leasing excess capacity to sell basically to their customers of Azure. If they're canceling leases, and again, I think the company might have come out and said something, well, that would mean that there's less demand, right?
Mm-hmm.
If there's less demand, and then you see kind of a slowing of CapEx budgets, I wonder how much of economic activity here in the US, ex the consumer guy, has had to do with these hundreds of billions of dollars of spending on AI and infrastructure. And, to me, I think that's not a small amount.
Not insignificant at all. You're smart to point it out. I think a lot of things have been masked by a lot of different things over the last 9-12 months or so. But, seemingly, a lot of things are starting to come to the forefront. And, anecdotally, and we mentioned it earlier today on the podcast with Liz, but I think it's worth mentioning again. What we heard out of Toll Brothers, again, it's a one-off without question, but they are the higher end consumer, and they saw one of the first year-over-year declines in average selling price we've seen in quite some time. So you start trying to connect the dots, the trade down to Walmart, some of the commentary that they're hearing, obviously some of the higher end retailers that we've heard from. And then you sort of overlay the things you're talking about. And maybe a lot of this has been just a bit of a mirage in terms of the now I'm doing air quotes, economic growth.
Yeah, you can throw autos in there too, right? So when you think about that, I mean, there seems to be some downward pressure on large purchases. I mean, the housing market is its own animal, but if you think about autos too, interest rates are having a difficult time there. This Toll Brothers is really fascinating, Guy. I mean, it's down 35% from late November. That was an all-time high. And, you hear that expression all the time. Well, markets don't crash off of all-time highs. I mean, there are stocks, really economically sensitive stocks, important sectors in our economy who trade like we are going into a recession. Now, we haven't used that recession word in a very, very long time. I think a lot of folks got caught off sides going into 2023. I certainly did. I'm not an economist, and maybe I lent too much credence to a bunch of other strategists and economists and was kind of, I don't know, maybe I was cherry picking a bunch of stuff as it relates to stocks or sectors, Guy. But man, you have not heard strategists talk about recession in a very long time. And maybe that speaks to some of the complacency that gotten, a little, I don't know if you want to call it like, some spirits aroused, if you will, late last week.
Yeah, what's interesting, and I'm not an economist either, so I rarely use terms, but I will say this, Mike Wilson, who we've had on the podcast a number of different times, and in his most recent appearance, there are a lot of people, Mike included, that talk about these rolling recessions in different sectors and what have you. So I do think it's interesting to point out, and like you, if you had asked me what I thought would have happened a long time ago, I thought we'd be in the throes of one, and maybe it's the amount of liquidity that's out there that's sort of prolonging the inevitable. But the signs are clearly there without question, and you're right to bring up Toll Brothers and the move that we've seen. And if you do longer term, you'll sort of see exactly, the significant move. And all these home builders look alike, by the way. But then the precipitous decline. Now we are at levels where theoretically we should hold. If you want to draw a horizontal line across that prior bottom that we sort of took off from, you'll see we're basically exactly there. But man, oh man, Dan, this is pretty critical levels.
Yeah, folks are going to explain it away about the kind of supply demand dynamics, but again, I mean, at some point in the not so distant future, if we see, we have PCE on Friday, if we see readings of inflation kind of stick, or I guess just kind of stay in these ranges, basically not going down anymore, then, I think a lot of interest rate sensitive groups are going to have a hard time. We could talk about the 10-year on another day, because that seems to be slightly at odds with some of the inflation data that we have seen. Amanda put together the S&P 500 sectors, Guy. I think this is really interesting.
Before we throw that up. Okay. So let me just address something. So we did a podcast earlier today, and I may have looked like a different person. Mike, one of our biggest fans, by the way, who I interact with constantly on Twitter, wanted to say something, and I'll read this for the folks in their car. I love just saying that. Unlike you, I'm not a media star. I am not a media star either. I am, however, a consumer of the podcast. Maybe you'd like to get feedback from your loyal watchers, such as myself. I know this is unlikely. No, it is very likely. Here it is, Dan, closer to the razor. Well, look at me now, biatch. Clean shaven, baby. Back to you, Dan.
I love that. That's pretty cool. I mean, you look great. I mean, we can't expect you when we're recording a podcast at 9 a.m. to look like you're going to be as like a media star at 5 o'clock at the NASDAQ on CNBC's Fast Money. It just doesn't happen. Guy doesn't wake up.
Come Monday morning, I am unshaved. I shave on, as you know, but I will enlighten the audience here. I shave on Mondays and on Thursdays, twice a week. That's my schedule.
Can I ask you a question?
For quite some time.
How often do you change your razor if you are only doing twice a week?
Good question. I'm still apparently, like all these razor companies, they went from, obviously when we were kids, we used the single blade. You may recall
straight
that.
Edge. Straight edge.
And we used to sort of, those were literally razor blades. And then somebody came up with a great idea. Wait a second. Maybe we could do a floating cartridge with 2 blades. And that would be the sensor. And then somebody said, well, if 2's good, 3's got to be better by definition. That was from this morning. I am a 2-blade sensor guy, by the way. And I change the blades, I don't know, every few shaves, I guess. I probably should be more frequent, but that's what I do. And the rustier, the better, as you know, Dan.
Oh, geez. Why do you say that? Like, I mean, that is...
Because I'm a bit of a Neanderthal as well.
All right. So you ready for this, Guy? Take a guess the total U.S. market size for razors. Take a guess this year.
In terms of sales, market size of razors, I have it at $1.4 billion. All
right. That's amazing. 2x that, though.
You're kidding.
$3 billion a year. 76% of those are the men's razors. I mean, talk about a business that you just mentioned. You used to use a straight edge. I'm sure you had one really nice thing to put that little razor
strap. I used to have a leather strap.
Yeah, those things are probably 10 cents or something like that. Now these razors, when you buy a razor in 3 or whatever, it's like $20 or something. And then you buy, it's like $50 for like 18 of them or something like that. So again, I use one. I probably shave 6 times a week. I use one razor a week, and I get one thing. All right. That was a little.
Sorry, Amanda. Let's put it back up. Amanda's $3
billion. If you were to look at all these sectors, Guy, these are all the GICs in the S&P 500. Wouldn't you think we'd be up a lot on the year if just looking at this here? But I guess you got to get caught up with the XLC, which is up 7%, and then you got the XLK. Where's the XLK? We don't have the XLK.
The XLK is on the bottom, Dan. Technology sector today, it's down 0.2%, but for the year, it's up like 1%.
Yeah, that's interesting. I don't know if you're just eyeballing this. Aren't you thinking that the S&P is down in the year?
If I was just eyeballing this, absolutely. But then then you look at communication services, and that's the one that probably drags the entire thing up. So I get. Listen, I get what you're saying.
I think Meta is a big part of that. It's up 15% of the year. Let's go look at the XLC. But one thing is interesting, Guy. So the Fateful 8, that's what we're calling, is a Mag 7 plus Broadcom. Apple's down 1% of the year. Nvidia's flat. Microsoft's down 4%. Amazon's down 2.5%. Google's down nearly 5%. Meta, like I just said, is up 14%. Tesla's down 17%, and Broadcom's down 7.5%. I mean, so that's 30% of the S&P 500. That's 50% essentially, I think, of the NASDAQ 100. And the fact is, we're up 2.5% of the year. I mean, the broadening out theory is at least working for now, because if you go back, look at that. Look at it, man.
Listen, I hear you. I mean, it's just, again, it's money flows. The S&P wins to money flows. Generally speaking, these individual names win to it as well. I mean, but there's some warning signs out there. And again, we talked about this earlier, but it's worth pointing out. I know Doug Cass has written about it. Warren Buffett is now up to $34 billion on his balance sheet. So he continually stashes away money, and his indicator that, again, is not a timing mechanism, by the way, is now, I think, north of 211% or either side of. So, the red flashing that's been there has not ceased. And, you saw, it's interesting. Again, you saw glimpses of it, obviously, on Friday. And to a certain extent, today's activity is showing you sort of the volatility that I think we're going to be expecting more of, or we should expect more of.
So this is not in the rundown, guy, but I just want to bring it up because it just flashed before me. I think one of the days last week, hims and hers was one of our chart of the day. And let's just pull this up. This report's after the close today. This is on Friday. It got nailed because I think the FDA came out and said there's no longer shortages of these GLP-1, these obesity and diabetes drugs. And these guys don't have access to the actual brand. I do call them branded, like the Wegovy and the Ozempic and the Zepbound and the Mounjaro. They do compounds. And so the stock got absolutely murdered. It's up, bouncing a little bit today. It was down before that. The implied move in the options market, guy. Take a guess. Just take a guess. And the
implied move in the options market today, without knowing, is 13.5%.
Okay. I mean, that is probably what it normally is, but because of the volatility, you see that move
it's
when
more than that.
It's 24% in either direction. All right, how we figure that out? I think you know how we figure.
Stocks, I know, but I am shocked. I mean, that is a
50.
Huge move.
So listen to this: stocks at 50, okay, and the at the money straddle is $10, or it's 10.5, almost $11. So that's insane. I mean, the fact that this $50 stock could move $11 in either direction. Now, I want to pull up the flip side of this is Novo Nordisk, NVO. So the company has been kind of guiding to like disappointing sales of Wegovy and Ozempic, and they're faced off with Lilly, right? Zepbound, and the other one. And look at this thing, guys. So you have that huge gap, right? And then you kind of look at the way it's been banging around between 80 and 90. I mean, at some point, that gap probably gets filled. I mean, you know what I mean? And then maybe that 200-day is moving back towards that 110 level or something like that. It's an interesting looking chart, especially if you think now, maybe without the shortages, maybe they take back some share from the compounders, because the compounders are going to go away.
I agree. And that's one, actually, if you're looking for a valuation play, I think in terms of Novo, you can make a pretty good case for it. So I'm with you on that one. And I'm shocked at the implied vol. I mean, you laid it out, so I'm not questioning you. But man, oh man, that is a huge move. If you want to go back to HIMS real quick, if you're asking me where you get in this thing, I will tell you the prior all-time high, if you want to go back, and it was resistance in December of last year, is about 35. And I don't think it's out of the realm of possibility to see a move back down to that level.
And I'm just looking back now at the options trade in our chain in Novo, guys. So the stock's trading at 90.40. If I look at the at the money straddle in March expiration, so that's a little less than 1 month, you're looking at the call premium about 410 and the put premium about 350. 760. That's a big implied move over the course. And I don't think there's any earnings or anything like that. That's just speaking to the volatility that's in that name in Novo Nordisk. They're not going to report again until May 7th. It feels like there's always data coming out about these things. So, again, that one, the Novo, is priced for volatility too. So for whatever that's worth, I might look at a call spread in that guy. Maybe we'll see how this thing kind of sticks around at 90, but those premiums are pretty hefty, man. So maybe it looks like something like selling a put spread which is bullish. If you sell a put spread, maybe using the proceeds of that to buy a call spread, that would be a risk reversal, guy, but it would be like a riskless risk reversal, or risk to the point of the width of those two spreads.
Look at you. I mean, that's dropping some knowledge there.
What do we call this company? What
risk reversal media?
Oh yeah.
There's because Amanda makes these great slides. Let's look at the earnings this week. And, we got Zoom today, and we're going to talk about Zoom in a second. I will tell you, amongst the ones that stick out, Nvidia, which is the obvious one. You will talk about Dell correctly. Salesforce is obviously in the software side has been a monster. But Home Depot, man, I got to tell you something. That is fascinating to me. And if Amanda wants to put up a longer-term Home Depot chart, I will tell you, about 2 weeks ago, incorrectly, I thought Home Depot was going to take out these little double tops we had created. Yeah, and that was, man, you could not have been more wrong, because the reversal has been swift. We're right at the moving average. Home Depot tomorrow, given this formation, is going to be really important, I think. So stay tuned for that one, Dan.
Yeah, I mean, listen, this is on the back of, what we said about yields, what we said about the housing market, what we said about Walmart. I just don't, I don't know how a company like this is going to be able to guide up in a way that, is kind of going to get the stock going back up above $400. I mean, I know there's some weird stuff, and I hate talking about this. You tell me, Home Depot, what did the fires mean for them in the quarter and the like? It seems like it's a probably pretty isolated situation too, but there's going to be a multi-year rebuild there, and I'm sure that kind of helps them to some degree. We hate talking about those in terms like that. But I don't know. Let's talk about the Zoom tonight, because I think this is interesting, and I kind of laid this out. I put a bunch of bullets down, Guy. Maybe you find it interesting, maybe you don't. So Q4 earnings tonight after the close, the implied move in the options market is about 10%. You see that I think 60% of the analysts rate this thing a hold or a sell. So the street is kind of mixed on it, right? Excuse me. The average move over the last 4 quarters has been about 7%. It's up 50% or so from those August lows. Guy, those were all-time lows in August. And, we were talking about that. I don't know why I didn't pull the trigger on it. I mean, I guess early August felt like a kind of weird period. Then you had that big reaction to earnings. Let's pull a 5-year chart out here.
Well, this is where it looks really interesting, right? Because this stock on a 5-year basis has been flatlining, or what appears to be a flatlining. Obviously, we've had some moves to the upside. But you are, I think, setting up for, and we've talked about this before, so this is not in a vacuum. This is, to me, potential for a bearish to bullish reversal over the last couple of years, which could be very powerful. I mean, this stock could trade north of $100, and still nothing has really fundamentally changed all that much in terms of where we've been historically. So this to me is pretty fascinating trade.
Yeah. And so when I think about just kind of like, let's look at the earnings and the sales. Okay. So they're basically expected to be flat, but this is a very profitable company. I think they're going to do about, or expected to do in fiscal 2026. So that's this year coming up, $4.8 billion in sales, adjusted net income of $1.7 billion. That's got a 77.5% gross margin, but there's no growth here, right? So you think about what is the story that they're going to be telling, how they're using generative AI, and they are using it. There's a whole host of, kind of services they're going to tack on to what's going on here. But again, if they were ever to point towards reaccelerating earnings and sales growth, this thing's off to the races, and 30% of that market cap is in cash, and there's no debt. So, if you're thinking about a 30% cushion in this thing, I know you can't use it exactly as a cushion, especially if you start to see some earnings degradation in that. But if there's earnings reacceleration, this thing could be off to the races. Now, how am I thinking about playing it, dude? 10% into the print. It's a really tough one. I think if you get disappointing guidance, you probably don't want to buy the stock. You know what I mean? But if you get good guidance that the street believes, and then you start getting analysts to maybe go from those 21 analysts who rated a hold and 7, or whatever, a sell, you're at least going to get those sells up to a hold, and maybe you get some holds to a buy. Why do we care about that? It just kind of marks a sentiment shift one way or another. So this one looks really interesting to me. I don't really have a trade right now, but I'm really interested to see what they have to say, listen to the conference call, and then I might figure out how to do something there, guys.
And by the way, I don't think you're going to necessarily miss it if it does start to accelerate to the upside. So that'll be worth watching. By the way, I don't know if this was Amanda or Jacob just sent this, but what is that thing that you probably read it? I don't know. I'm not familiar. The Onion. You know
Yeah,
this?
yeah, The Onion.
Well, apparently in 2004, there
Yeah.
was an opinion piece about the aforementioned multiple blades on if Amanda or Jacob can put up sort of the article, because it basically speaks to exactly what I was just talking about.
Gillette sensor.
Yeah, I mean, don't leave. Oh, here it comes. Look at this. Watch. Fuck everything. Am I allowed to say that? Well, I'm reading,
Sure,
so we're
sure.
doing 5 blades. It's just
I
the
love that.
absurdity of the whole thing.
I know,
Two
but
blades is sufficient, by the way.
this is like this is a joke, website. This is
No,
like,
I am familiar, but there's always a sliver of truth in these things. We
dude,
do follow that.
look at I love that other one. Numerous teams express interest in Aaron Rodgers playing elsewhere. I mean, these guys are funny. They've always been funny.
No, it's hysterical. Anyway,
Um,
so I'm
I
not the
want
only
to.
one that thinks that. The more than 2 blades, it's overkill.
So you
Unless you're
still
friggin'
buy the
Grizzly
classic?
Adams. I
Do
mean,
you use?
or a Yeti. I
Do
mean,
you
what the
still
hell do you
use
need
those?
multiple blades for?
Well, it's a smooth shave. I mean, um, all right. Here's one I want to take a look at here. This is Dell Computer Guy. They report on Thursday, 10% implied. It's really amazing. Look at these implied moves for some of these names. I mean, we got
Mhm.
5 up here that are, between 8 and 11% or something like that. So Dell obviously makes the servers that go into the data centers that train the models. We've done this again and again. It had this big rally about, I don't know, 20% or so over the last week or so. This is one that I find interesting because there's so much news out in and around this space. Is like, okay, Microsoft may be canceling leases. Apple says they're going to spend hundreds of billions of dollars on data centers. Stargate, I mean, the list goes on and on. You'd think this would be really good news for Dell, right? And the stock can't get out of its own
Can't
way.
get out of its own way.
So this one
It's
would be really,
surprising. I would
yeah.
have thought it would trade better. And we can draw, if Amanda wants to, she can draw a trend line from the May 2024 high. The second point's going to be like in the fall of last year. And the third point theoretically will come in. Yeah, there you go. Look at Amanda, man. She navigates this thing
That's
like
what
a
she's doing.
boss.
Yeah.
Anyhow, I mean, so you can see we could potentially right up against pretty significant resistance here in the form of the moving average as well. So if you want to take a flyer here, I get it, because I think you can make a case on valuation, but I'll be honest with you, Dan. I'm more inclined to try to buy the breakout above that trend line than to play it right here. That's just me.
Well, if you're looking at expectations, earnings expected to be up like 10, 11%. Sales growth expected to be flat. This is a 22% gross margin company. They do have, some competition from, what is that company, Supermicro or whatever. If they don't get delisted, that's not going to affect the company per se, but like maybe they're trying to compete on price. I think they've been doing that for a while. That quarter in August that we've highlighted a couple times, where 17% expected gross margin came in at 11%. So I don't know how you can undercut your competition, by that much. And if it goes to like, single digits or something like that. But this is one where you're definitely going to see the push and the pull from some of these headlines about overcapacity and the like. So I don't know. I'm not expecting like a big thing out of this. And if they were to guide just in a like slightly higher, I don't think that's enough, So I don't know. I feel like it's a value trap at about 13 times, guys.
No, I think that's fair. And, we're going to listen. I say buy the breakout, because this was everybody's darling at some points last year. But stock it's not been participating at all. And essentially, we got a good question from Eric. And I saw this as well about Texas Instruments. I mean, this is a huge move on the back of an earnings release. I think the stock buyback probably excited some people. I think people look at Texas Instruments and maybe make a case on valuation, but I'll be honest with you, Dan, I didn't see that move coming. So here you are, big gap to the upside.
Yeah, this is one that's always traded at a premium to the space. And, they do not have any exposure per se to like generative AI. This is a company where, Apple is one of their bigger customers, 6% or so, and they make like a small piece that goes in their processor. I mean, it's just not that interesting. And so a lot of the end markets are like industrial and the like. So they auto sales have been bad, all that sort of stuff. So this is not interesting to me either, but I'm not telling you that it's like sets up as a great short if you're a trader, but I don't really see any great reason why you'd be buying this guy.
We have a question about Alibaba we will address, but we have to go to our Palantir chart because you brought this up about a week or so ago. I think you called it the dumbest chart you've ever seen. And, we addressed the reasons why. None of us are haters, by the way. But we talked about the reasons why it just didn't make sense mathematically. And you've seen a pretty precipitous decline in Palantir, which, by the way, I still think has more room to the downside. And it's, again, not an indictment of the company, more of an indictment on the valuation.
Yeah, an indictment of investors who are willing to kind of chase it. When you think about that gap after earnings, those are shorts covering and the like. I just can't imagine that institutional investors are buying that thing up 24. I think what it closed up 24%. And I'm not saying the retail is the dumb money by any means, but if you're managing money, there's some parameters in which you are, willing to kind of push, I don't know, push the envelope as far as valuation and momentum and the like. So we drew that breakout level, a fill-in of that gap makes sense, but $80 makes even more sense. And if you look at when the stock was just above 120, what was it, 125, and that 200-day moving average is at 48, I mean, that is obscene in a way. That's why we called it the dumbest stock ever. And I'm with you. I read this book that Alex Carper, I read maybe 2/3 of it over the weekend. And, he wrote it with one of his other senior leadership at Palantir. It's a really interesting read. It gets a bit technical, but it's talking about or making the case why their mission in to assist, our government in coming up with some of the best, I guess, defensive starting. So I mean, it makes total sense. He takes a couple shots, or probably 100 shots at, the Google, the Facebook, and all those guys. They're just kind of twiddling away at making the next picture app or this and that, or whatever. But it is an interesting story, but it's on investors who are willing to bid it up like this. This was a $20 stock guy, like what, 9 months ago.
No, and we talked about this a number of times. I mean, it's not like he has changed anything that he's been saying, he being Alex Karp. I mean, he has been telling this story now for quite some time, and for whatever reason, people are starting to listen to him. Maybe it has something to do with AI, things around AI. Maybe it's just finally the market's woken up, but in waking up, it took it to levels that didn't make a lot of sense. Now, I mentioned we have a question about Alibaba. Throw it up, and that will then coincide with the call of the day, which I do find interesting. This is sort of a late to the dance type of situation, but let's take a look at it. Morgan Stanley upgrades it to overweight from equal weight. Okay, better late than never. $180 price target, which, by the way, I sort of agree with. But what we said last week, Dan, given the run that it had and given where it traded up to, we thought you could see a pullback. So to answer your question, Situation Room, I don't think you're pulling the trigger yet. I do think there's a chance Alibaba could trade all the way back down to 118, but you don't want to get too cute with this thing because you don't want to miss it. Now, 118 is the highs that we saw in the fall. If you go back and look, that's where I thought if we closed above, we trade 140. So it's all playing out, but I do think you can see a bit of a back and fill here, but I agree with their price target. I think their timing sucks.
What's interesting? And again, 80 to 145 in a straight line. That's not a normal move for a stock. You know what I mean? And so it just look at how many few down days it had, you know what I mean, from that move. So it just tells you people are reloading. I heard somebody on CNBC earlier say that they bought it at 118. So that was what, a week ago. And that does speak to, Guy, you like buying breakouts. I mean, look at that. If you bought that stock at 118 on that close, went from 118 to 145. That's a heck of a move in just a short period of time. But it just, Carter says this all the time, knowing who you are in the market. If you're a trader and you pay 118, then you keep raising a stop, in a name like this. And, listen, that, I don't know about you, but that last day, that Thursday move where it just kind of blew out, that's probably a good level in which, and I think you said it on that day. You were on Fast Money on Thursday, and I think you said, and on Market Call, you got to move your feet on a day like that, especially if that short-term price appreciation.
Somebody who moved their feet in the NFL was a gentleman named Terry Metcalf. Eric Metcalf is asking a question about Boeing. And Eric, if you listen to the podcast we did with Stephanie Link 2 weeks ago, if I'm not mistaken, she talked about Boeing being one of her favorite plays for 2025, and I agree. So it's had this little stealth rally. What's trading about 182 or so now. I think there's room to the upside here in Boeing. I think it'd be one of those things that sort of you wake up one day and it's north of $210 and you'd be like, ooh, That was interesting. I still think the secondary that was priced, where to get down to about 148 or so. We talked about at the time being a potential bottom. That's playing out. And in the absence of bad news, which again, that's a big caveat, I get it. But this can sort of do that levitation here, Dan.
Yeah, I mean, I don't have much of a take on it. I mean, the news has been so bad for so long, you know what I mean? And I think you said it at the time, you know, after they priced that deal, it came in the hole. There's pretty good demand for it, I guess, after the fact, and it kept on around. I don't think it looked back at all. All right, let's do a hot two, Guy. A hot two before we get out of here on NVIDIA. This is the one that I feel like this one has less importance than some of the other quarters that we've talked about over the last year and a half, partially because there's just so much news in and around the space. Like, you know, as far as I'm concerned, right? It just seems like we got a lot of information to work up. Now, some are going one way, some are going the other. This DeepSeek news a few weeks ago that caused that 17% downdraft was a huge gap. Look how quickly it filled in that gap, right? So investors were either looking for an opportunity to get in, or longs were looking for an opportunity to reload. Everybody's looking at this earnings event that's Wednesday after the close. The implied move in the options market is about 10%. I look at those series of lower highs, the series of lower lows. Now, that's just, again, in the chart. Who gives a crap, I guess, right? It really is about what is the quarter they print, but most importantly, what is the guidance that they are going to give? Because in the last few months, we've heard Blackwell, we've had some delays. Blackwell, we've had some bugs. Blackwell is going to see tremendous demand because, you know, the installed base and the like. Then DeepSeek proved that you don't need the Blackwell to train a model like this. Then Stargate comes along, OpenAI and Oracle and SoftBank, and they're going to spend $500 billion over the next 4 years. And you just keep hearing this stuff again and again. Sooner or later, you become somewhat desensitized to it. Sooner or later, the company is actually going to have to once again get above, right, like what the expectations are. That's what they were doing in 23 and early 24. So the question here is, the stock has made no progress going back to last spring. That's a long time to go sideways for one of the biggest market cap companies in the world. I just feel like, and again, I'm not expecting a 17% downdraft. If this company ever guides down, the whole notion that they're sandbagging, we heard that about Walmart, you hear it about Apple, that's not going to be the case. I just don't believe that. So when I look at this thing, you better hope that they come way above the expectations. And the last thing I'll just say is that earnings and sales expectations, Guy, for the current year, they've only been going up, actually. So I'm looking at expected, this is fiscal 2026, this is this current year, about 50% earnings growth and about 50% revenue growth. Now, if you say, well, the stock is trading at 30 times earnings and 16 and a half times sales, forget the sales number. You'd say, well, listen, if they're gonna give guidance that makes you feel better about that full year earnings and sales number, and you think the margins are going to stay up here, well, then the stock is cheap.
From couple years ago when they guided, I think from 7 billion to 11.5 billion in terms of revenue, the magnitude of that was like, where did that come from? Obviously, the numbers have gotten larger since then, but the magnitudes of the guides higher have gotten lower, or smaller, if that makes sense. So the numbers bigger, the magnitude smaller. I think that's going to continue. So again, you look at this, and every metric outside of price to earnings is, to me, expensive. And what I've said and what I will continue to say is they're out earning their revenue stream, and that speaks to margins, which, with all the competition that is seemingly coming, by definition, is going to be challenged. So, yeah, I mean, look, could they say something that excites people? Yeah, I guess. But to your point, it hasn't traded particularly well since sort of June of last year. And you've had some challenging technical setups as well along the way that last one we outlined back in January when we had that huge engulfing pattern. So I think there's competition coming, and I think the market's going to wake up to that. And I don't think they're going to enjoy the margins that they have over the last couple of years.
Yeah, to your point on the metrics, right? So I'll just throw up Meta, because Meta is also meant to be like the one name, at least in the kind of internet sort of space, X the hyperscalers, that has benefited from, all of this integration of the generative AI into ad serving and a whole bunch of other processes. This is a company that has very similar margins, 75%. You would expect this from a software or an internet company, but 76% for Nvidia, to your point, is a lot, right? There is a software component to that, and I think it gets some of that margin. But this stock is also trading at 30 times earnings for this current fiscal year, guy, that are expected to grow. Oh no, hold on 1 second. I got that wrong. But Meta's earnings are expected to grow. Sorry, let me just stay with me here for a second. This year,
high teens, I thought, but I
well,
could be wrong.
no, 10%, and then revenue growth of about 15%. There was your mid-teens.
Okay.
So it trades at 9 times sales, 26.5 times earnings. And, so you can make a case that these are kind of similar profiles, very different businesses. Okay. Meta is one of NVIDIA's huge customers. But, on the price to sales with NVIDIA, it's just, I'm with you. There's just no way that makes any sense. But if they keep earning the way that they have, and again, it's been decelerating from 100% growth to 50% growth, but if they're able to kind of maintain that sort of growth, or at least in their forward guidance, then the stock probably doesn't get nailed, guy.
Well, busy week because we have some PCE on, I believe it's Friday this week, if I'm not mistaken. The Fed's, what is it? Their
Most
favorite.
favored inflation reading. Most
We have
favored
GDP, which I don't know if that's interesting. We're a host of earnings, but we'll be here every step of the way, Nathan.
Yeah, we will. All right, my man. This was fun. We got to
Talk about shaving.
We got to learn what your process is for the shaving. I cannot believe if you use one of those plastic things that has 2 edges, I'm going to be really disappointed.
I'll bring it in. I mean, I'm not making this up. You don't need these highfalutin razors. I mean, people get, I have a fancy razor. They can GFY or
Really?
GFT.
What's the T stand for?
Well, instead of yourself, I gotta give it themselves
Or their selves,
something like that. I mean, me. I'm. If I could, I'd get like a shell on the beach. I've actually tried to do that, by the way. You get like a shell,
yeah,
a mollusk type of, and try to shave with that. Have you ever tried that or no?
Well, if you were like listen, if you were stuck on like a desert island, you know what I mean, all alone, I don't think you're shaving. Just go look at Tom Hanks in that movie Castaway. He didn't shave.
I'd find a way though. I'm telling you, I'd get a shell.
What is okay? You're on a desert island. You're all alone. Let's just say you're getting the fish. You're doing that. You're staying in decent shape here. Okay. You're catching water off of leaves and this and whatever. But you have one album. You have
Zeppelin's first album.
And you just listen to it every day.
Greatest debut album of all time.
And you never get sick
in
of it?
1967, I think.
You never get sick of it?
Well, I mean, how long am I on the desert island for? But
you're probably going to die there.
No, but then what I guess like anything else. But that's But there are a lot of them. Boston's first album, tremendous. The Cars' first album was unbelievable. Leonard Skinner's Street Survivors. Eat a Peach, designated to a brother by the Allman Brothers. Great. Live at Fillmore East, tremendous album. Bohemian Rhapsody, wonderful album. Meatloaf's first album, underrated, great album. A bunch of REM stuff in the 90s, great stuff. I throw that in there. Who's Next? Tremendous album.
Mr.
Darkness on the Edge of Town, top 5 album of all time. This is all off the top of my head, by the way.
All right, I have a question. The first record that you listened to is like a big band thing or whatever. Did you guys you didn't need electricity
Victrola,
on your...
we call that our Victrola. Man, you had the big thing that,
and you just wind it. And you just wind it. You just wind it.
Yeah, my grandmother said, "Little guy, come by the Victrola. We're gonna play Tommy Dorsey."
Okay. All right.
You asked. I mean, you ask these questions, and then I answer them, and you get frustrated. I don't know what to say.
By the way, guy, this is really important. If you still made it, if you're still here, next week on Monday, I think it's the 3rd of March, we are going to be moving market call to 11 a.m. 11 a.m. Eastern. We got a couple reasons why we're doing that. We're going to focus on a lot more trade ideas, which I think you guys have noticed that. And for folks who are kind of interested in kind of thinking about those trades and figuring out how they might express a view, we want to give more time in the trading day.
Gives you 2 more hours.
Yeah, we want to hear what you have to say about that time slot, because again, we're going to move this thing around if it's something that our viewers do not like. We did a survey and it seemed like the majority of people were fine with it. So give us some feedback. But Monday, we are going to be going to 11 a.m. We promise you every day we'll be out by noon. Hopefully we'll get a bunch more questions, Guy. Won't that be fun to get more questions?
We'll be out before noon. I mean,
yeah, like clockwork.
Yeah, we
So
don't
that's
want
it.
to hold like today. I've been rambling on, not to
No,
use a lot
both of us. We got to hear about your razor, your desert island record.
By the way, I heard there was, it's funny because they're such a likable group. But I heard there was some
dust up.
what's the word? Dust up.
Yeah.
On the HTR. It's unfortunate.
Well,
I like them individually so much. I mean, you don't like to see people bicker.
No. So we'll check that out on the YouTube. All right. A lot of fun. Thanks for being with us on the market call. Guy Adami, Dan Nathan. We'll see you tomorrow, 1 o'clock.